So gold actually surprised a lot of people. Back in March, it actually came down together with stock market performance. I have a little bit of gold. That's why when I saw it coming down with stock market performance, I was a little surprised, to be honest. But it has actually recovered quite substantially, and in fact right now it's in positive territory. But gold, as we try to understand a bit better, some of you may be thinking, is it a good time to invest in gold, or is it wise to invest in gold for a long period of time? Today we will address each and every one of these questions. Actually, a previous question has came up before, and Chaz has actually mentioned that gold is actually a good investment. But nonetheless, let's really unravel what gold actually delivers for you. I'll show you some of the latest news, latest developments when it comes to gold. I'll also show you in this video today, you know, what the long-term performance results so far in gold. And the last part, of course, when you stay towards the end of the video, I'll show you the top brains, what they think of gold. I've actually a summary of that, and if this interests you, continue watching on. Hi guys, welcome back. I guess you're in this video for a couple of reasons. A, you believe in this all-weather portfolio theory. This is actually by Ray Dalio. So in all-weather, it means that this portfolio can survive any economic conditions. So in an all-weather portfolio, you realize it looks something like this. Let me show you to you over here. You realize there's 7.5% allocated to SPDR Gold Trust. Now the gold supposedly has its value for diversification, but the next person, I don't believe in an all-weather too much. But there is definitely a school of investors who believe in an all-weather portfolio, and that's fine also. I'll actually show you something else different. This is actually by Motley Fool. I believe gold has certain use at certain periods of time. I can't really quantify it personally. That's why I don't really suggest portfolios to have gold, or private clients' portfolios typically don't have gold at all. And what you see over here in Motley Fool is they mention a few things. Gold can be useful in relatively small amounts as a hedge against inflation. It keeps up with inflation better than cash. Now, next point is majority of a portfolio should be invested in productive assets. As I mentioned in the start video, towards the end, I'll show you what Warren Buffett thinks about gold. But nonetheless, the second point why you're here in this video today is you've been searching for high returns investments over the short period of time, and gold has actually surfaced out. Take a look at this chart over here. Gold has actually done 30% on a 1 year basis. 30%, that's ridiculous. That's why in terms of 1 year performance, I don't think there's many asset classes that you can find out there that's done 30%. But nonetheless, 30% is over 1 year. Over a longer period of time, not so much. Rewind back a couple of years, gold was actually stuck. Later I'll show you a chart on it. Gold was actually stuck for a very long period of time. It's very painful, very uninteresting, but as of now, gold is starting to get interest. But nonetheless, as of this current moment, I do feel technology is a lot more ramped up, a lot more rah-rah in technology. Everybody's talking about Facebook, Amazon, Google, less so in terms of gold. So if there's a bubble, not so much on a personal sharing basis. So while gold has done relatively or fantastically well over a 1 year period, it's still not too much as a bubble period, because I've actually bought gold before back in 2008, 2009, which I'll show you a little bit later in the video. The third reason you're in this video is because you came across some news that's mentioned very sexy titles. These news are still not rampant. That's why I still believe gold is still not in the bubble state. Take a look at this by Business Times. Gold jumps to a 7-year high as Fed unleashes new emergency aid. Now, I don't know if you've seen this already, but there's a lot of stimulus mentioned all over the world. In Singapore, government is doing about 40 billion in terms of stimulus, but USA, at least 2 trillion, which is 50 times that of Singapore. That is a crazy amount of money injected. I have a chart specially for you to understand how much money is printed, and take a look at this. This chart is actually on Fed's balance sheet, which means how much money is printing out. You see a short spike at the start of this graph. That's back in 2008, 2009, correct? It actually spiked up $1 trillion. Now, what do you see over here? Now the spike is a few $1 trillion. This in 2020 is the major quantitative easing. There's so many financial terms, but nonetheless, just put it in simple terms for you today. It's just printing money. US government is just printing money to stimulate the economy. Singapore government has reserves, but US is all on borrowing. They're just printing money out of thin air. That's why a lot of people are concerned whether inflation is going to happen in US as well as the rest of the world. That's why when it comes to inflation, assets tend to do better, like hard assets, like gold. But if we see over here in this chart, what exactly is gold? Gold, in a lot of ways, just simply understand it, it's a currency. It's a form of currency. Gold in this chart over here is gold over USD, XAU, USD. But gold can be against Euro, gold can be against Canadian dollar, gold can be against anything. But when the most common one is being pointed, is actually gold versus US dollar. And when you buy the gold ETF in Singapore, it's actually denominated in US base. And what we see over here in this long-term chart, what we realize, there's a massive spike, correct, in 2008, 2009. When was that? There's actually the global financial crisis, whereby there was a lot of stimulus being injected. Like what I showed previously, there was $1 trillion injected into the markets, and that's why gold price actually shot up. It shot up 80%, that much. And what's happening now? We're actually doing a few $1 trillion, many more times more serious than global financial crisis. And yet gold is still not even higher than its previous peak of 1,800 in terms of US dollar. That is why a few people believe that gold is possibly one of the most natural protection against a major inflation if it ever does happen. So now let's move on to the next segment, which I'll show you long-term performance of gold and what some of the best brains in the financial markets think about gold. Now, before we move on to the next segment, help me smash the like button so that more people can be educated about financial content and join our community, become more financially savvy. Now, let's pull up this by Investopedia. I'm sure it will help you in certain ways. This is a summary, but nonetheless, this data is a little bit outdated. I'll try to adjust for you along the way. What is mentioned in the first part, let's read together. Over the last 30 years, price of gold has increased about 280%, but Dow Jones Industrial Average has gained 839%. That means when you invest in stocks for the last 30 years, you've done a lot better than gold. That's a nutshell of this first portion. But the second part, if you look from 15-year time frame, gold has gained 278%, but Dow has only increased 173%. Now, this is to tell you that when it comes to investing, it depends on which time segment you cut it out. If you cut from a 15-year time frame, of course, gold looks a lot better. In fact, I did some adjustments. As of now, gold has gained about 400% versus its price in 2005. That time it was only $400 per ounce per US dollar. Right now it's $1,007. But nonetheless, there are a lot of top financial brains. This over here, let me pull out for you to quickly see. This is by Mark Cuban. Mark Cuban is the owner of Dallas Mavericks basketball team, a very astute businessman. But he mentions that gold and Bitcoin have no intrinsic value. There's no point investing in it. He invests in businesses, companies, etc., real estate, I'm sure. But he mentioned that there's no intrinsic value, and that's also echoed by Warren Buffett. Warren Buffett is never an advocate for gold. He's actually mentioned in many annual meetings to shareholders that gold has no value. It's just purely speculation by someone else has to pay a higher price. It's a currency at its core, which is true. It does not derive you any passive income when it comes to investing. And there's actually a special segment which I'll pull up for you to quickly see. This is actually mentioned by Warren Buffett also in a statement. Now, as of now, post-coronavirus, this pandemic, now is not a very good time. Now it's a very good time to borrow money, but not a very good time to be lending money. What does that mean for you as a retail investor? I want to break this down for you. What it means is right now interest rates are so low. Fed rates are at zero. Singapore savings bond rates are at zero. Let me pull out for you to quickly see. This is Singapore savings bond rate, which means as a lender, you are not rewarded. The 10-year return, 10-year average return is at 1.05%. That pathetic. It doesn't bring you any wealth at all. What it means is, as of this moment, if you are very savvy, you should be borrowing instead of lending. I repeat that again. At this current moment, rates are so low, which means if you are astute, you know how to handle good debt, you should be borrowing instead of lending, which means there's really no incentive to chuck money into savings accounts, Singapore savings bonds, etc. That is why gold has a little attractiveness in terms of being a storage of wealth, in terms of protection against inflation, because Singapore savings bonds cannot protect inflation for you anymore. I've done previous tutorials, you can check it out. I've always been an advocate for Singapore savings bond, but as of now, it doesn't protect you against inflation. Gold is emerging as a potential source of inflation protection. But having said that, I've always found a struggle when to sell from gold, because again, like what Mark Cuban and Warren Buffett say, you're only hoping for someone to pay a higher price, which means there's no definitive time to sell. I also struggle with that concept. It's out of this concept. Cash is trash, own some gold. Now, this is not mentioned by me, this is mentioned by Ray Dalio. You can look at this over here. He's being a big advocate. That's why in his all-weather portfolio, gold is a component of it. In the next video, I'll also be discussing how you can get invested into gold with different avenues. Can you buy physical gold? Can you buy the gold ETF? What are the pros and cons using CPF to buy gold? I'll touch on all these segments. So in a future video, subscribe for it so you get notified when it's released. So again, if you have comments, leave them in the comment sections. I'll pick up each and every one of them. With that, I'll sign off. If you haven't subscribed, smash the subscribe button. I'll see you in a future video. Take care and goodbye.